Hello, it's a lovely good evening from here in Delhi, and hope that each one of you, as always, are absolutely fine. And we always pray for your good health and for your well-beingness. So, hoping that during these times of coronavirus, each one of you are what we call are absolutely safe and in fine health. On such note, we start today's this particular session, and this happens to be pretty what we call strong accounting standard, as you can see. The title being flashed on your screens. So Ind AS 1, and it of course happens to deal with presentation of financial statements. Pretty strong standard, as I've already told you. Reason is very simple, because it sets out the guidelines as far as preparation of the financials are concerned. So as a professional, you need to have a very good idea and a very thorough idea regarding this particular standard, correct? And we will see that this particular standard actually basically deals with the general purpose financial statements, just to ensure that the comparability both with the equities financial statement of the previous period and of course the financial statements of the other entities can be what we call compared. So that is the basic idea, that an entity should prepare the presentation, should what we call prepare the financial in such a manner so that the comparability both with equities past performances and the what we call comparability with the other entities performances can be what we call done. Besides, we shall also see, as far as this particular standard is concerned, this particular standard of course applies to every sort of what we call entity. Besides that, it also includes such entities which prepare what we call consolidated financial statement, of course as per Ind AS 110. And besides, if a particular entity happens to prepare the separate financial statements, then also this particular standard is mandatory. So on such count, we start this particular standard as usual. So even though more or less it happens to be pretty theoretical standard, but we have a habit of writing each and every word. At least we are going to discuss each and every facet. I've already told you it happens to be pretty long standard, so you need to actually gird up your line. Have you heard this particular phrase? That means you should be now absolutely ready. Actually, this particular phrase is gird up your lion is used so often in what we call defense arena, that means military what we call field. But anyway, so we here, and even doing this particular standard, to be very honest with you, is nothing sort of a military exercise, correct? So be ready. On such count, we start this particular standard. As we normally do, we start with the objective. So point number one, and I need not require to tell you that it is a makeshift arrangement. Time and again I have been telling, and you must have by now actually noticed and become familiar with respect to that. So on such count, we start now. Objective. Objective I have just told you, but it's in spite of that. Objective. Objective of the standard, just a moment ago I told you, is to ensure, correct, the basic idea of the standard, because the standard basically prescribes the basis for the presentation of general purpose financial statement, so that, as I said, to ensure the comparability both with the equities, what we call past performances, and what we call with the financial statements of the other entities. So we write here in this particular case, standard prescribes the basis, as I said, for the presentation of general purpose financial statement, prescribes the basis for general purpose GP, general purpose financial statements. So often we are going to use this particular word during the what we call entire length and breadth of this particular what we call a standard. So basically standard prescribes, as I said, what we call some basis for the general purpose statement to ensure what? To ensure comparability of entities' financial statement with the past performances, correct? Comparability of entities entities financial statements of previous year and as I said, actually in the screen we have to settle out the things. That's the reason actually in the initial stages you will find me moving a bit slow, because I have already told you it's not a professional studio. So we accept in the opening stages itself that on technical count we might be what we call lacking a wee bit, but time and again I also keep on saying that ultimately we are more concerned with the contents, and on that count we shall leave as always I tell, no stone unturned. Correct? So previous year and with the financial statements of the other entity, with the financial statements of other entities. So this is the objective. After having a look over the objective, the next part of course is to see the applicability portion, correct? And as far as scope is concerned, as we call it, I have already told you this standard is applicable to all entities, all types of entities even to entities as I said, which are preparing consolidated financial statement, even to entities that are preparing or that prepare consolidated financial statements, CFS, consolidated financial statements. I have written as per Ind AS 110, as per Ind AS 110. You are very well familiar with this. And similarly, as a moment ago, I also said that this particular what we call a standard also deals with the entities who are supposed to prepare what we call separate financial statement, and even to entities that are supposed to prepare separate financial statements, correct? Separate financial statement. Lots of short words I am going to use, short forms in fact I am going to use, so you have to be a bit careful in this regard, correct? And after having a look over these aspects, you also, because since we have now we have started discussing scope, so just for the knowledge sake, you also need to understand that this particular standard will not apply to interim financial statements, correct? So I will write here, however this standard does not apply to interim financial reporting. So if the entity would prepare interim financial reports, then it need not require to what we call adopt this particular standard, correct? So these are the things, first of all, the basis which upon which actually we are going to hold down our discussion. So after having a look over the fact, what exactly is the scope and what exactly is the what we call objective, so now we are in a position also to discuss some other aspects. We will see the standard later on speaks about what we call purpose of the financial statement. In fact, to be very honest with you, para 9 deals with it. So we come down to purpose of the financial statement. This is third point in our discussion, or I will make it third and I will make it fourth, correct? Purpose of the financial statement at this level, to be very honest with you, I need not require to actually let you know what exactly the purpose of financial statements. So purpose of financial statements, please take care of this particular fact. FS stands for financial statements. Quite obviously, financial statements are a structured representation of the financial position and the what we call financial performance of an entity. Correct? The objective of the financial statement is to provide the information about the financial position and about the financial performance and about the cash flow of the entity, as normally we are very well aware of, especially to the wide range of what we call users, whosoever are what we call having a sort of interest in our concern. Correct? So, standard, as far as purpose of financial statement is concerned, in nutshell we can say the purpose of the financial statement basically is to what we call provide information about the entity's assets, liability, equity, income and expense, as we will see later on, correct? And besides the contribution by the owners and the distribution to the owners. As we know, the owners actually contribute to the entity what? Capital. And what entity distributes to them? Entity distributes to them what we call dividend or interest also, correct? So purpose of the financial statement. As far as purpose of the financial statement, I have already told you, purpose of the financial statement, of course, is to what we call have a sort of what we call look on the financial position, financial performance and the cash flow, correct? So purpose of the financial statement basic is to provide information with respect to what? A. Assets. These are normal, common, what we call things which as a student of commerce each one of us are absolutely well aware of. B. Liabilities. Then equity. Of course, income and expense. Income and expense. Income and expense. And as I said a moment ago, company should also provide information with respect to what we call contributions. How much has been contributed by the owners? Contributions by owners. And distribution to owners. How much has been distributed to the owners? Distribution to owners. So that is basically is the purpose of the financial statement. But why this information we are giving? Because the basic idea or the basic objective of the financial statement, as I said a moment ago, is to what we call give information regarding the financial position, regarding the what we call financial performance, and of course regarding the cash flow. Correct? So these are the things. And to meet these objectives, actually we need to what we call give information with respect to all these things. I told you basic purpose of the, let me take the red pen. Basic purpose of the financial statement is what? Basic purpose of the financial statement, as I said, or objective, which each one of you know very well, is to give information regarding the financial position. financial performance. Financial performance. And cash flows, that is cash flow statement. So basic objective of the financial statement is to present information with respect to the financial position, with respect to financial performance, and with respect to cash flows. And in order to meet these objectives, it becomes what we call the basic idea and purpose of the financial statement, to provide information regarding all these things so that the users can actually draw out what we call the conclusion regarding all these things. Is it clear to you or not? So once we have become deft with this particular what we call idea, now next we will move over to another significant part. Now, as a student of commerce, we also need to know, in fact, as a student of commerce, we need to know, but we need to know because standard has given all these things. So to be very honest with you, not only as a student of commerce we need to know, but the next point in the what we call, I will keep this sheet now over here, correct? So the standard next actually talks about the complete set of what we call financial statement. What exactly the complete set of financial statement at this level? In fact, para 10 actually has given this particular information. The complete set of financial statement, especially under Ind AS, you need to know that a balance sheet, it comprises of a balance sheet, a statement of profit or loss account, of course, of the period, and a statement of changes in what we call equity for the period. That's something new, because in the existing accounting standards, as far as complete set of what we call financial statements are concerned, statement of equity is not there. So under what we call Ind AS, it is there. So besides that, statement of cash flow, and of course notes, which is comprising a summary of your significant accounting policy, then only we say that it is a complete set of what we call financial statement. So this is our fifth point, I think so. So complete set of financial, complete. Just let me fix up the sheets in the right position. Actually, this is the only area of trouble which we face here in this makeshift arrangement. Complete set, and it is very difficult to write also, and I am very habitual of writing a lot. Complete set of financial statements. Some of you, if you want to write, I think it is para 10 of the standard, correct? So as far as complete set of financial statement is concerned, it comprises of balance sheet at the end of the period. Please write that also. Then a statement of profit and loss account for the period. Balance sheet at the end. A statement of profit and loss account for the period. Beside, a statement of changes in equity for the period. A statement of changes in equity for the period, correct? Equity I will write, and henceforth for writing statement of changes in equity, I would use SOCE, and it's a legal short form, correct? It is widely used, so no problem in this case. It is legally accepted acronym for statement of changes in equity. D, statement of changes in cash flow for the period. Statement of changes in cash flow for the period. Besides, notes. Of course, whenever we say notes, your notes basically comprises of summary of all the what we call significant accounting policies and significant explanations, suppose, because sometimes the financial items in the financials fail to deliver the exact information in detail. So at that time, actually, we need what we call notes, correct? So this is what standard says regarding the complete set of financial statement. Further, standard Ind AS 1 also states what? Single statement of profit and loss account. Now what is this single statement of profit and loss account? It is nothing. Single statement of profit and loss. Actually, as far as international scene is concerned, nowadays in many countries, P&L is prepared separately, and one is P&L and other is other comprehensive income. Both are actually basically profit and loss account. Correct? Regarding these, you will learn in detail in the upcoming standards, no doubt about it. But right at this particular moment, it is sufficient to say that profit and loss account, basically international accounting standard states that should be prepared separately. Profit and loss account should be prepared separately. Other comprehensive income should be prepared separately. However, Ind AS 1 has suggested that you should prepare only single profit and loss account, but that should be divided into two parts. The upper part is basically P&L and the lower part basically is your other comprehensive income. So entity will present with equal prominence of all the financial statements in a complete set of what we call financial statement, and entity will prepare only a single statement of profit and loss account with profit or loss and other comprehensive income presented in two sections. So basically, single statement of profit or loss account, that means you will prepare only one statement of profit or loss account, but it will have two sections. Section A will have profit and loss, and section B will have other comprehensive income. But you will have one statement, other comprehensive income in short form I have written. Regarding that, we will learn later on. Correct? So single statement of profit or loss account, what we call, has been prescribed by Ind AS 1 but not by IAS 1, because IAS suggested the separate, in fact, two statements of P&L, you can say that way around. Correct? So after this, we need to have very important very important point to look at, and that is explicit and unreserved statement of compliance. So what does it mean? Explicit means very clear, self-explaining. Explicit, correct, which explains itself very clearly of its own. Explicit, just let me settle the, as I keep on saying, that is the only problem. Explicit and unreserved statement of compliance. What does it mean? It means, suppose I as an entity who is which is following what we call Ind AS. Suppose I have prepared my financial statements for the year and I want to tell to the world that I have followed Ind AS while preparing what we call these financial, then I need to make a very clear, self-explanatory, explicit statement that we have complied with all the accounting standard. That means the financial statement of an entity must contain explicit and unreserved statement of compliance. And if it is not there, then we shall construe that entity hasn't complied with the what we call relevant Indian accounting standards. So that is why this is a very, very important term. That means entity whose financial statement comply with the Ind AS shall make an explicit and unreserved statement of compliance of notes. In the notes, sorry. Correct? So, and if that is not done, then we shall presume that entity hasn't complied with the Ind AS. We got this particular, so nothing to write in it, but important point is that if an entity has prepared the financial statement, correct, as per Ind AS, that in the notes, entity must actually clearly mention that we have actually we make a statement that unreserved statement of compliance that we have followed Ind AS. But if that statement is not carried, then it will be construed that entity hasn't complied with the what we call Indian accounting standards, Ind AS. So this is very important. Then next point is presentation of the true and fair view. Presentation of true and fair view. We will see that para 17 actually deals with this particular part of this particular standard, if I am not wrong, correct? Explicit and unreserved statement, para 16 actually deals, and para 17 of Ind AS 1 deals with what we call presentation of true and fair view. So often, and right from the beginning of what we call our journey with respect to accounting education, with respect to commerce education, we have been hearing this particular term, but honest, and how many among us, you tell me honestly, are really very well aware and well versed with this particular phrase? Could anyone among you let me know very honestly, is very well familiar with? Of course, if I would ask, but right now, because since it's a makeshift arrangement, I cannot ask and take up the questions also. So the point here is that otherwise on the messages, we can pick up the what we call questions and answers, but here right now it is not possible. But anyway, the point here which you need to be very aware of, it looks very simple. And before I dwell further, let me tell you, so often even in the interviews, this particular question has been tossed up so many times, and I've seen that the prospective candidates are not able to really come out with an answer which is most satisfying one. Need not required to tell that true and fair view. If we are going to put up this particular question to you, most of the answer which we would receive is that, of course, there must be what the financial statement must be prepared in a truthful manner, in a fair manner, in an unbiased manner. No, nothing like that. Presentation of true and fair view basically means that entity has selected and applied proper accounting policies in accordance with the relevant standards, and especially with respect to Ind AS 8, because Ind AS 8 deals with the accounting policies and of course with the changes in accounting estimates and errors. That is the idea, number one. Number two, when we say true and fair view, number one, now please keep it in your mind, because this question so often I have seen asked even in the interviews, correct? So true and fair view means entity has selected the accounting policies basically in the light of Ind AS 8, because it is Ind AS 8 which deals right now with the what we call accounting policy, besides that what we call estimates and errors, correct? Number one. Number two, while selecting the accounting policies, make sure that these are absolutely, they present the information with great relevancy and which is reliable, which is relevant, and which is comparable, and which is understandable. This is what we mean by true and fair view. Then of course, the accounting policy which we have adopted, correct, regarding that we need to provide the complete disclosure also. This is true and fair view. I hope you got this particular point. So presentation of true and fair view basically means, I can surmise it this way, selection of accounting policy, selection of accounting policies, selection, light is glaring in front of specs, that's the problem. Selection of accounting policies as per Ind AS 8. As per Ind AS 8. I've already told you Ind AS 8 deals with accounting policies, changes in accounting policies, estimates and errors, correct? The policies selected should be such that it is able to provide relevant information, correct? That means our accounting policies should be such that it is able to provide relevant, reliable, comparable, and understandable information. Understandable information. Correct? Then disclosure. In order to provide any additional information, we may need what we call disclosure aspect. So when we say true and fair view, that means entity is selecting its policies in the light of Ind AS 8, because it is Ind AS 8 which speaks a lot regarding what we call guidance and regarding the management, etc. of what we call affairs of the entity and how an entity should actually select the accounting policies. And whatever policies which we have selected and applied, it should be capable of what we call providing the relevant information, as I said, and reliable, comparable information, and which is understandable. It should not be vague, it should not be clumsy, it should not be opaque. The transparency should be there. And of course, if we need, then we should provide additional disclosures so as to comply with the specific requirement of any Ind AS. So this is what we mean by true and fair view. You must have noticed, actually, it looks so easy, but sometimes very difficult to actually give answer to. I hope actually after having a look over this, now you are in a position henceforth to deliver an answer which would satisfy. Then standard also speaks about what? Standard also speaks about what we call departure from the requirement of Ind AS. Well, in fact, I would like to toss this question to you. Is it possible for an entity to depart from the what we call Ind AS? Let me actually write first. Departure from the, just wait, departure from the requirement of Ind AS. Is it possible? Is it possible? It goes without saying that if the entity is preparing its what we call financials as per what we call Ind AS, quite obviously entity should follow each and every aspect of Ind AS. Logically, it may appear that we cannot depart from any requirement of the Ind AS. If the Ind AS asks us to actually adopt this sort of what we call course of action, we need to go by that. However, it is possible, you may be surprised to know. Yes, it is possible. So your answer is that an entity can really depart. Depart means move away. That means if the entity feels that if we are going to adopt this requirement, perhaps we may not be able to present our financial in a true and fair view, in a true and fair manner, as I said earlier. So Ind AS gives a leeway, a sort of liberty to the entities if they feel that by adopting the requirement of a particular Ind AS, their accounts may not be able to, their financial may not be able to unleash the information in a true and fair manner. In that particular case, they can depart. But if they depart, then they will have to provide the reasons for the same. Reasons, and they will have to provide the reasons by way of notes. I hope you got this particular point. So till up to this particular point of time, we have learned a bit regarding this particular standard. You have seen that even in the beginning itself, there are many such points regarding which we were not aware of earlier, even though we had heard a lot about them. But so these are the things which we need to know a bit, and I have already told you it happens to be a pretty strong standard. So in the upcoming session, we have lots of things to discuss with you.